All right. We did it. We survived FOMC. FOMC announcement is officially in the background. That means we got Reaction Thursday, one of my favorite trading days, right around the corner. It's Wednesday evening. It's time to get back to work tonight, guys. April 28th, 2021. As always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trade setups for tomorrow. That's Thursday, not just any Thursday, the Thursday after. We call them Reaction Thursday, one of my favorite trading sessions of the year, really, right? Of the month of April. Of course, I got a great video in store for you guys and gals tonight. Lots of great range-bound and breakout setups I'm watching for tomorrow. Before we jump in, though, and get this party started here tonight on the video, I just want to make sure to remind you, make sure you subscribe to our YouTube channel. We publish this video newsletter every evening with best trade ideas for the following day. I don't want you to miss tomorrow night's video, so make sure you subscribe to our channel. When you do, hit that little bell icon so you always get notified every time I publish something new. And don't forget, if you guys have any questions for me, you can always drop those questions in the comments section. I'd love to answer all your questions here tonight, so don't be afraid to ask questions. And if you guys enjoyed the video, if you enjoyed this content as much as I enjoyed making it, do me a big favor, hit that like button, that thumbs up button for me here. Really appreciate you guys carving out some time with me every evening on this video. So make sure you subscribe. That's your one most important job tonight. Drop those questions in the comment section if you got them, and thumbs up if you guys enjoy the video here tonight on this video newsletter. But enough of the intro. Time is ticking. We got Reaction Thursday right around the corner. Let's get these charts going here. Where do I begin? A lot to cover here. I am very excited for tomorrow's trading session. As I mentioned earlier, it's one of my favorite trading days of the month is the day after the FOMC announcement. And as I mentioned last night on the newsletter, hopefully you saved some bullets. Hopefully you saved some of that risk tolerance for tomorrow's trading session, because as you can see, with the exception of the gold, right? Gold, of course, is wide open here, but we're very much coiled up on the NASDAQ and the S&P. When markets get coiled up like this, you know there's something coming, most likely very soon here. S&P, NASDAQ are both range bound right now. They both have range, but they're a little bit different. The S&P right now is bullish into a range. I would love to buy the dip on the S&P or the breakout up to that big 4207 area tomorrow. The NASDAQ's a little bit different. NASDAQ's more of a spike in channel, so I definitely anticipate we've got some bears up here. I would love to sell short here on the NASDAQ, but at the same time, though, with everything being so bullish overall right now, I'm looking for a breakout, obviously back up to retest those highs. We'll talk about the short side and the breakout side here tonight on this video. And how about that gold? We talked about last night how difficult it was to find a way to get short on gold yesterday. They took it lower, and now they've got this beautiful rotation running higher. The pendulum swing puts us up around 1,800 on the gold for possibly tomorrow or Friday. I've got a bunch of great buy the dip scenarios as well as buying breakouts here on the gold for tomorrow. So really excited for tomorrow's Reaction Thursday. I'm going to break down all my favorite setups, and by the end of this video tonight, you'll have a really good plan of attack for Thursday's trading session. But before we jump into the charts, though, let's just make sure we all know the schedule for tomorrow, because we do have quite a bit going on in the next 24, 48 hours. Now, please remember the next couple days here, Thursday and Friday, we go into a very interesting time of the month because we have the end of the week and the end of the month both coming together on Thursday and Friday, right? Anytime we have the end of week and end of month. The end of month is really the big volatility, right? No, volatility usually increases around the end of the month. So again, we've got some range-bound markets this week, but I'm hoping we're going to see some nice big breakouts here tomorrow into Friday, again, as the end of the month pressure starts to build in these markets, right? If you're working for a big trading firm and you're way up on the month or way down on the month, right, there is a lot of more aggressive trading that gets done. Markets become a lot more risk tolerant as we go into the end of the month. So I'm hoping that now that we have the FOMC behind us, and again, with those coiled up ranges in the E-minis right now, I'm hoping that will produce kind of a jack-in-the-box moment here the next couple days here. So I'm very excited and optimistic about some big moves in the markets here the next couple days. We also, of course, have earnings the next couple days, specifically the NASDAQ stocks, right? You've got Twitter, Facebook, I think I saw Amazon. They're reporting after the close. So just be aware if you are trading in the early part of Asian session, 6 p.m., 7 p.m., 8 o'clock Eastern time, right? Pretty much the overnight session for us here in the U.S. or Europe. If you are trading in Asia, just be careful. You've got some, again, quite a bit of tech earnings coming out after the closing bell right now. And when the markets open back up at 6 p.m. Eastern time, there could be some pretty volatile price action there. So just be careful if you are trading there in the beginning, kind of the overnight session, 6 p.m., 7 p.m., 8 o'clock Eastern time. And then tomorrow, looking at the news for tomorrow, we've got a nice big block of news tomorrow to kickstart tomorrow's trading session. Got the jobless claims, which I don't expect to be too big of a deal, but we definitely be watching that GDP report tomorrow at 8:30 Eastern time. The 8:30 news, GDP, that's the big headline. The jobless claims, that'll be a very small piece of the puzzle tomorrow. The GDP number is going to be on our radar. Look for it will be a very big number tomorrow on the GDP. No one is doubting that, right? The reopening economy is in full bloom right now, and that is producing some pretty remarkable numbers across the board, right? Just look at Apple's earnings here this afternoon. But we do watch closely tomorrow morning to see if that number misses or if it just crushes it. The big reaction we'll get tomorrow is if they miss that GDP number. Everyone expects a big number tomorrow. Keep your eyes open for something underneath the expectations. Now, what I always do is I don't even try to overthink this stuff. I know the news comes out tomorrow at 8:30. By 8:35, 8:40, I'm updating my charts. I'm trading the reaction, right, with all of our clients tomorrow morning in our trade room. So remember, we open up our trade room every morning at 8 o'clock Eastern time. We'll get the charts all prepped up from the overnight movement, and we'll go after it there at 8:35, 8:40, right? We would never trade right on top of that news. There really isn't much else at the rest of the day. Tomorrow, GDP and jobless claims are the big news report. And again, right, definitely be there early tomorrow. Get those overnight charts prepped up or updated, and then be ready for the reaction. Should be a pretty busy day tomorrow morning in our trade room. And guys, you're always invited to come out and join us every morning at the opening bell. We trade together every day, 8 o'clock Eastern time, Monday through Friday. I'll put all the membership links. You need to come out and join us every morning. I'll put that right in the description of this YouTube video. Let's get back to those charts, though. Now you guys know what to expect. Again, expect more volatility. Hopefully we get some nice big moves here in the next two trading sessions because of this coiled up price action. And again, hopefully because we've got this FOMC announcement now behind us. Tomorrow's GDP report, maybe the cherry on top for us here tomorrow. S&P's ready. NASDAQ's ready. Gold is ready. Glad to see you are ready right along with us. We are bullish on the bullish on the S&P, bullish on the gold, and believe it or not, we're actually bearish right now on the NASDAQ. Don't tell that to the buyers, right, who ran this thing higher here. Let's jump first, though, into the S&P here tonight. We've got a lot to cover here tonight, so move relatively quickly through this. We are pretty much, for the most part here, we are pretty much a bull market into a range-bound environment right now on the S&P. One thing that stands out on the S&P today is the buyers never got their chance to buy that nice deep dip, right? The buyers never got their chance. Gold got it. NASDAQ traders got it. The S&P, though, buyers are starving right now, waiting for that nice deep dip so they can load up the ammunition, right, and then run this thing hopefully back up to retest the high. That would be where my favorite trades tomorrow would be, right? Again, we've got that trading range. Ranges act like magnets. My job is to find areas of support below that trading range, right, and look to buy off of those support levels. At the same time, as we go higher here, we've talked about this many times already this week. I would see if the market does not pull back for us, I would see that as being a major failure of rotation, right? We should be seeing this market go up and rotate back down with what's called a pendulum swing. If we don't see that, if the market makes a run higher here, that is a very significant bullish clue, and I will be looking for breakout trades as we go. It will be very difficult to justify selling into this thing as it goes higher. So picking my spots for the sell side are going to be difficult. Plenty of options when it comes to the buy side right now. What would be my three favorites? What would be my three favorites right now? If I could choose three favorite trades, they will all be on the buy side right now because there really isn't a lot of options on the sell side. We'll grab a look at the sell side in a moment here, because there definitely will be some if the bears can get it put together here tomorrow. Three favorite setups here on the S&P. First one is a trap entry using the first battle zone below the low of this trading range. Now, traps are always my go-to kind of bread and butter setup whenever I'm concerned about trading too close inside that range, right? My job in a bull market with a trading range is to find levels of support below the range and combine one of my favorite entry setups. And traps are the ones I use when I'm just around the edges of that trading range, right? So when I'm worried about being too close to the range, again, I would love to see them take out this low, get those bears come in, right? Get them trying a couple times, get that trap below that low, right? And rip that sucker back up into that trading range, take some profit off at the highs, leave a target right up for those new all-time highs. My second favorite trade here would be a deeper pullback. Now, the hardest part about this deep pullback is it may just V-bottom. We may see so many buyers that have been starving down here trying to find some, right? I mean, look at this thing today, right? They held that low just remarkably well. When I saw them make the run up today, I thought, okay, perfect. They're going to get that pendulum swing down. But you'll notice the FOMC saved by the bell, right? Saved by the FOMC. Literally, the buyers, of course, came in off the FOMC, and they never had a chance to buy low. If I can get this move going lower, my ideal entry setup here, my ideal setup would be a seller failure into a pullback combination. That would be my kind of my ideal setup here, would be a seller failure pattern into a pullback combination. Now, what may end up happening, just in case you're curious, again, because there's so much pent up demand down here, what may happen is we may see something like this where it just rips higher here, right, and runs. I might not even get a good setup. If that happens, that's when I start to look for these kind of hidden channels across the high, and I try to buy that pullback right after it. This will be one of those times where let's kind of wait and see how it goes, right? Again, I'd like to get that move down, get those bears to come in, get short off the moving average. Once those bears, like back here, right? Once they get short off the EMA, then you can look to structure your entry by buying into those stop losses and, of course, buying that pullback, right? There's a good example, failure into pullback combination. So hopefully we can get that, right? A failure into that pullback combo and get that run, right, going higher here. Again, there may be such pent-up demand here, it may simply V-bottom. And when it V-bottoms like this, what I'll usually do is I'll usually look for a new hidden channel here and just try to get that pullback. I'm not a big fan of buying it as it's going higher, right? I'm just not a big fan of buying high, as you can imagine, right? So I'd like to find if we don't get that failure up and over and then buy that pullback at the low of that channel. This will be one of those kind of game time decisions once we see it pull back there for us. That's my second favorite setup as we go. And guys, keep in mind these failures. Failure patterns, pullback patterns. Remember, I'm just simply kind of drafting up my ideas here for tonight. I'm sure right now you're wondering, well, what are the rules on this? What are some variations of it? I cover all those rules for these setups. I'll show you a lot more kind of perfect examples of these failure into pullback combinations. I'll go over all that stuff in our free trading class. I'm not going to go over it all here tonight on this video, but I go into a lot more detail in that free course. I'll put a little pop-up there for you in the upper upper right-hand corner. So definitely grab that, right? Grab that little free course link up there, and you'll get a lot more detail about how we actually qualify the setups, trigger the entries, the trade management, when to take them, when to skip them. You'll learn all those details in that free class mentioned in the upper right-hand corner. Third favorite setup here for tomorrow is definitely a breakout. Now, this could be 3 and 4, two patterns I'm watching for as we go higher. First one would be a 2-try trap. Again, I do consider this, if we do go higher, to be a major failure from those bears. Something will definitely be in the mix if this thing does make a run higher without finishing off that pendulum swing. So if we do go higher here, nice strong move up. The one I hope I get is called a 2-try breakout. It'll be a strong move up, a shallow pullback. Strong move up, shallow pullback, higher high in price, and that trap low. You'll always get extra bonus points for combining that off the low of a channel. One of my favorite breakout patterns. And again, I call them breakout patterns because we do have a range on this chart right now. The kind of fourth pattern would be that 1, 2, 3. So if we don't see a strong run up, shallow pullback, higher high, if all we get is a kind of, relatively modest move up, but if they can hold that pullback and jump off the moving average, now we have a 1, 2, 3 breakout, and I can certainly start looking for that first pullback off the low of that channel, right? I'm not going to take the first pullback because it's a range environment, and this range acts like a magnet. But if I can get this thing to go 1, 2, 3 and actually show me, remember, it's not enough to see a strong move up. It's not enough to see a strong move higher. They have to be a strong move higher and then hold it, right? You got to hold it. That's what I need to see proof with that, what we call a 1, 2, 3 breakout pattern. And then I will get aggressive looking for any entry setup. My two most common that you'll see at the low of those channels are going to be bear traps and seller failures. Those are the two most common I'll look for around the low of that channel. Again, I'm not going to go over all the details in this video, but I will cover those in a lot more detail in that free trading course, right, linked up in the upper right hand corner. Those are my 3 favorites. If we do get the market running higher, the round number's great, but I doubt 4,200 will be the end of the road. I've got that pendulum swing I've been talking about all week here, 4,207. And that could be 4,207.50. It could be 4,208. Think of this whole area as kind of a range up there. So, think 4,205, 4,208, right? It's a pendulum swing, right? So pendulum swings are always a little bit fuzzy as far as exactly where that area is. But that's what I'm looking for here if I can get into this thing as it breaks out running higher. Now, I'm sure you're wondering, okay, Joe, how do we sell this market? You can't always buy, right? No, certainly not. I have no problem being a seller. There's only really 2 ways to get short this market right now. I have to either A, take out the highs and look for a nested failure as a reversal, which will basically be the buyers, right, trying a few times, and then we're simply selling into those stop losses, right? We call those nested failures. They're basically failure patterns with a slight twist because it is so bullish, right? So if I do want to be a seller, I want to give those buyers the benefit of the doubt up there. Let them try it once. Let them try twice here. One of my kind of secrets is always to add a trend line at that low, a trend line at that high, and look to hit it off that trend line. Sometimes we don't get that. Sometimes we don't get that kind of perfect example of it, and we got to go in and simply sell into those stop losses. But that would be one short setup I would look for. The second one would be a strong move down, and the sellers now hold it, right? They hold the pullback and they jump off the moving average, just like a 1, 2, 3 breakout going higher. This would be a 1, 2, 3 breakout going lower, right? So strong move down. Again, the strength of that move lower isn't the most important. The strength of the move coming off the moving average, that's the one that's important. Again, it doesn't matter how strong the pullback is, right? A lot of times markets are very strong on the pullback, but they quickly fail. So again, right, I'm not going to take that first pullback down here. That would be foolish. I will be looking for the hold and go. And once we do, I'm going to mark up that low, I'll mark up that high, and looking for that first test right off the high of this channel, I would definitely want this thing to be underneath the pendulum swing. In fact, you can probably use that pendulum swing as resistance on the opposite side. You will oftentimes see when a market is range bound like this, those kind of edges, as we call them in our trade room, they act as support, but then they act as really kind of stingy, really sturdy resistance once this thing breaks right on through it. And again, as I mentioned before, I'm not just simply selling the top, I'm waiting for one of my favorite entry triggers. Most commonly, there'll be traps, right? Bull traps in this case, buyer failures. Remember, failures oftentimes turn into pullback combinations, right? You can learn more about that in that free course that I mentioned earlier. Where do we think the bears want to go here? I'll tell you, the bears have a hell of a job in front of them. If they can get this thing to run, they've got some wide open spaces down here. But as I've been talking about all week on this video, right, on this newsletter, this is a spike in channel overall, right? It's a spike in channel, so just be very careful trying to force trade short down here. I realize a lot of times we see these very strong moves, but again, unless they can hold it and push through that area, then I can mark up that low, mark up that high, and I can sell it, right, going short from there. But I definitely am not in the business of trying to predict a reversal. I would much rather wait for that pull back, get that failure, and rip this thing higher here, which I do think probably one of the best setups we get here for tomorrow. Again, don't forget, grab that free course I mentioned in the upper right-hand corner if you want to learn more about those entry triggers that we use every day in our trade room. Let's keep going though. S&P is all set to go here. How about some NASDAQ? Now, NASDAQ is very similar in the fact that we are range bound and the fact that we are overall bullish, but it's very difficult to make a bull case right now, besides the fact that you've got these huge, right, pops off these lows. It's very difficult to make a case right now to call this a bull market. The buyers are just simply not getting anywhere. You can definitely tell the buyers are well fed right now, right? Like I said earlier, the S&P buyers, they're starving, right? They're starving right now, trying to get a pullback. The NASDAQ is obviously buying the dips, but they're not getting anywhere, right? Either they're running out of ammunition, or what's probably happening is this spike in channel. And spike in channels, of course, are notorious, right, for selling in the base of that channel, right? We talk about spike in channels quite a bit on this video newsletter. Spike in channels are notorious. If you take that trading range, that channel, think about that, right? Think about that first pullback right there, that area right there, that first pullback in the base of that channel. That is where sellers will be waiting. You can see they're waiting up here, they're selling it, and I would hope, right, we'll get a shot to sell this thing back down again tomorrow. Now, of course, right, if the buyers can break this thing open, they get a nice, easy, most likely a short squeeze, stop run rally up to retest those all-time highs, and that would be what the buyers would love to see here, obviously going into tomorrow's trading session. One interesting thing about this chart that I found here is this price action gap. It's kind of funny because the price action gap didn't happen over the news, right? The news, of course, came out, right about there, right? 2:30 this afternoon. We, of course, right, we don't see that price action gap, that 13,921 gap, until about 4 o'clock, 4:05. So kind of interesting how the price action gap is there. That price action gap, now remember, gaps do usually get filled. The question is when they get filled, right? We may, for all I know, we may pull right back and right get that gap fill and run higher here. We may go all the way up to the all-time highs and then come back, right, to fill that week. It isn't a weekend gap, it's a price action gap. And we just don't see those gaps that obvious and still stay open for very long. So the bears have the edge. The buyers are definitely nibbling right now. What would be my 3 favorite setups here on the NASDAQ? It's pretty easy if you ask me, right? First of all, I would love to get short up here. I'm hoping I can get a good setup here in the overnight or in the pre-market to get short off the highs. We have all of this bullishness, right? I mean, look at how strong that move is. Anytime we see a strong move in one direction, we expect another leg in the same direction. Okay, we've also got potential here for a pendulum swing, the amount below the range, the amount above the range. So, kind of the moral of the story is I don't want to just simply step in front of this freight train right now. I do realize it looks that easy, right? It looks easy enough, right? Just wait for a red candle and sell a red candle. It definitely looks pretty easy to do that, right? Not my style of trading. I'm not a big fan of trying to pick those tops in this thing. So for me, what I would look for is my favorite first setup for tomorrow is a short side setup. And to do that, I'm going to respect the buyers, right? Respect the momentum of the buyers. Wait for these buyers now to try a couple times. And boy, a couple different pattern setups come to mind here. One would be, of course, that nested, right? I have to wait for a nested right now just because the buyers have all of that strength, right, going higher here. So what I'm looking for is on the pullback, I want to see buyers try a few times. Now, my favorite kind of variation of these nested failure patterns, as we call them, would be a trap high. Traps are definitely my favorite because they usually are almost an instant success, right? So we got that high. The buyers, of course, they try to buy it once, they fail. They go lower, they try to buy it again. Get that little trap, right, between the first high and the major high there. That is a very, very good setup here. Again, we call those nested failures. Now, as I mentioned earlier, I always like to draw a trend line off that low, bring it up around that major high, and find that short there, right? So that is another option. That's my first prime setup here on the NASDAQ. Now, going in that same vein, if you will, right? If the market was to keep going, what's another option we have? Well, we get the pendulum swing above us. My second favorite setup would be what I call a two-try breakout. We talked about this on the S&P. I have to be concerned about the all-time highs up here, right? And remember, when it comes to all-time highs, it's never just one level, right? It's this whole area up here between 33 and pretty much 60. So I got to think of this whole area as a range of resistance here overhead. What I'd like to do is get a strong move up. My second kind of favorite setup would be a strong move, a shallow pullback, barely touches the moving average, a higher high, and a trap off of that low. This will do exactly what you do. It will rope in some of the sellers. It'll give us a chance to structure the trade to buy as low as possible, right? That way we're not simply buying that pullback and hoping it keeps going higher. And as always, if I can include a channel on this, even better, right? Extra bonus points if I can grab that channel as we go. And then, of course, same basic idea, right? If we were to run up, if we were to see a pullback and a blast through those all-time highs, now it's on, baby. Now we mark the high up, mark the low, and now we start buying pullbacks off the low of that channel, right? That 1, 2, 3 breakout, we call it. Just be aware, though. Notice how I'm not saying 1, 2, 3 breakout and then buy that first pullback there. That's going to be a dangerous trade, right? You can see how those are very similar, but that's not going to be the trade I'm looking for. It's not one of the prime trades I'll be waiting for tomorrow. I'll be waiting for that move up, that shallow pullback, that higher high, and that trap. Now, that trap it will protect me against buying too high into that overhead, well, what is the all-time high, right? The king or queen of resistance, right? Overhead here. So again, be very careful with this 1, 2, 3 breakout pattern. I know, and I'll say this. If we can get, if we can get a 1, 2, 3 go, and if I could get in on this, with a bear trap, right, or a seller failure, I shouldn't say we can't take a 1, 2, 3 breakout. It's possible. It's just going to be a very kind of thread the needle to try to get in before we retest these highs here, right? So that's an option. Just be aware. I don't want to be buying into that all-time high unless it is that to try trap pattern, as I keep alluding to, right? That's the one you want to be looking for if this really starts to make that run going higher. So we got one short side, we got one long side here. What if we get the short, right? Let's say, for example, the market gets the short. We come right back down into that low now. Can I buy these lows? I absolutely can. And that's my third favorite setup here on the NASDAQ for tomorrow. Will we get that big roll lower. Okay, then what's the problem here? The problem is not location. It's a great location, right? Got a lot of support down here. Again, think of this as just kind of one big range, right? We rotate. There's a good chance the buyers are waiting right there to buy it right back up. There's also a possibility they hold that pullback and we collapse and end up like the S&P going back kind of that beginning of that big move, right? Like the S&P would as well. If we do end up getting this market rolling lower, my concern is not location. It's a great location to trade. One of the things I'm always telling you guys is I'm always asking, right, how's my location and how's my momentum? Okay, those are the two variables that will go into determining which entry triggers, right, we're going to use. And again, I talk a lot more about these entry setups and the entry triggers and the rules I use. I cover a lot more detail in the free trading classes here at School of Trade. So grab that free course link in the upper right-hand corner, right, and learn more about those, especially if you're here for the first time right now. So location and momentum. Location's great. Right, we're on the lows here, right at support, the low of the channel, right, big time low from the big picture chart. It's a great support area to buy at. The challenge is momentum. Location's great, momentum not so much. So if we end up rolling lower here, again, I want to be a buyer. What's my concern though? Yeah, my concern is momentum. So as we go lower, how do I absorb those bears? I let them try a couple times. Let them try once. Let them try twice. Again, can I get that trap below that low? That'd be great. Or maybe all I get is that trend line off that low. Either way, there are two very easy ways to trade these. Again, what do we call them? They're failure patterns, right? They're basically seller failures. You could also call them reversal patterns in this example, right? But basically, it's called a nested failure, just because you're trying to absorb the seller's momentum and then run this thing back up into that trading range. I love these trades. These are probably my favorite trades in the last 3 or 4 weeks in our trade room. We see a lot of these nested failures in our trade room. We call them number 4 patterns in our trade room. And again, you'll learn more about them, right, in our video classes. So again, 2 ways to do it, right? I can buy off the trend line, I can buy off those swings, and of course I can also buy into stop losses as we go higher. Now, one thing you may recall from earlier this week is we oftentimes will see these things really rip, right, and run higher. Don't forget, you can also now draw a new trend line off that high, off that low, and buy that first pullback, right? That is another great kind of combination of this setup here. I realize we'll be back near the range here, but you won't have to worry about it at that point because you'll have so much momentum going higher, right? Everybody will want to buy that pullback. So it's failure pattern, right? Again, failure off the low into that pullback combination. That's my third, and not final, but my third favorite, right, out of kind of all of these setups here today. I talked about this earlier too. If we do end up making a run lower, and if these sellers can finally get their act together, because they've had plenty of chances back here, right? If we can get this run going lower here, take out these lows, get these bears now to actually do something down here and hold that pullback. Again, remember, it doesn't matter how strong the pullback is, they get a jump. Right? It doesn't matter how strong the pullback is. They got to jump. They got to run this thing. So until we get that 1, 2, 3 breakout, I'm going to keep on looking for those buys, right? Going back up into that trading range. If we get that 1, 2, 3 breakdown, right? Then of course, mark up that low, mark up that high. And I want that first pullback, right? I want that first pullback. That first test is always the best test. I'm not going to sell the first one, as I mentioned before. I will gladly sell the second one though. Again, the most common entry triggers off the top of that channel, bull traps, right? Buyer failures. And oftentimes it'll go failure into pullback combination as we come off of, right, the high of that channel, right? So imagine you're kind of zooming in on that channel right there. We'll talk a lot more about those combination setups in the free classes I keep mentioning. All right, and again, pretty easy target here, right, for those bulls. For the bears, right? The bears would love to get back down, 13,760, 13,740 there. All right. So the most important thing right now is, do we get a short off the high? Does this market turn around and make that run higher? And we've talked about a couple different options to trade as the market runs higher. Just be careful buying into those highs. And we might get lucky. We might get that big move down, right? Get some nesteds down here and rip it right back up into that trading range tomorrow. Lot of potential here on the NASDAQ tomorrow. And you get that little gap there at 921 even. Let's keep going. Let's keep going. Having some fun in this video here tonight. Hope you guys are as well. And I'll tell you, if you are watching this video right now, you are the person I do this for. Right? You're the person, right? We're 30 minutes, 35 minutes in the video right now. You are the person I record this video for, the people who are dedicated and serious about this. So kudos to you. If you're still watching right now, give me a hashtag 1% because you are part of the 1% club on this YouTube channel. Hashtag 1%. And I hope by now you've subscribed to our channel. Hope you hit that thumbs up button here. It's great to have you with us here on this video. So thank you so much for sticking around with us here on this lesson. Now, over to the gold here. Looking at gold, it's bullish, right? It's very difficult to call this a bear market right now. And it's amazing. We're right back in the range where this whole session began here. Now, it's probably beneficial here to get a zoom out here because you can see what's happening in gold right now. We basically have one big range here, and the market is just rotating back and forth, right? Now, you'll notice we just recently finished off a big pendulum swing. Right? Remember, ranges are balanced markets. The amount up goes down. It's amazing how these pendulum swings work. I talk a lot about those in the free trading course. So we're coming now, look at this. We're coming off of that big pendulum swing down here. Right? I told you guys last night, very difficult to justify getting short down here because we had so much support below these ranges. So the market takes off the downside. The pendulum swing holds, pretty much, right? Remember, pendulums aren't going to be exact, but they hold, and they just run this thing right back higher now. So now we basically have the momentum now swinging back in the other direction, right? We roll lower. Now we're anticipating now. Again, we're right back in the middle of the range, which is not very great to be trading in there, but we're waiting for now or anticipating a full rotation, right? Potentially back up. These are not even close to all-time highs like the S&P and NASDAQ are. But as you can see, though, we've got some big tops up here, right? 1798 and 1800. Now, the buyers have had a chance to do this many times, right? Let's but before we go mortgaging the house right now and putting it all on gold futures, the buyers have had a couple options here, right? They had options there. They've had options before. They've really had a couple shots here to blow the lid off this thing, but they haven't been able to get the job done yet. So I'm not going to get too aggressive, buying it as it's going higher. I'm going to keep on following my plan of trying to buy at support, buy low, using bear failures, using bear traps, and looking for ways to get in on the way up to, again, not the all-time highs. It seems like everything's the all-time highs right now. Not the gold, though, right? Gold, 1800, 1798.4 will be a good objective there for those bulls. You can kind of see where I'm going with this, right? Measured move, one leg, two leg, three leg. We don't really know exactly how far the market will pull back right now, so we'll know more about that once we do get that pullback. Three setups here. My three favorites on the gold. This is an easy one. We have a trap low. That is a great example of a strong move up, a shallow pullback, a higher high in price, a trap off the low of this channel. Easy, right? Beautiful possible setup. We call those what? Two try traps, right? Trap setup off of that low. You can see a great example of that same pattern setup right there, right? Strong move up, shallow pullback, higher high in price, trap, baby, right? Great setup off that, right? Off of that low. Strong move up, shallow pullback, higher high in price. Right? Say it with me, right? Trap, baby, off the low. Again, if they can grab it off the low of that channel. That's my first favorite setup on the NASDAQ. It's a trap setup, on the gold, right? Off the low of that channel. My next favorite setup would be just as good, in fact, probably even more desirable. I've got a support level down here. In fact, you could say this is a range, right? And ranges, what are ranges? Ranges are magnets. Now, in this situation, all of that bullishness, I'll bet if we pull back into that range, you're going to see buyers coming in and hitting it again. Now, the problem with that is, though, it's going to be a little bit too deep of a pullback, a little too deep to go for a trap, right? So I'll do is I'll wait for that pullback. I'm not going to try to pick a bottom on this. It's very difficult, as you probably have learned, to pick bottoms in these deep pullbacks, right? I never try to pick bottoms. It's a fool's game. I'll wait for the pullback, and if they fail, I'll rip it, right? Wait for the pullback. If they fail, I'll rip it. And a lot of times you'll get that failure into pullback combination, right? Failure into pullback combination. That's exactly what I'd like to get over here. I'm not going to try to predict that I'm not going to try to predict the bottom of it. And again, it's a waste of time. You're going to get stopped out too many times and you'll give up on it. Wait for the pullback to the moving average. If they take it lower, what is that, right? That's a 1, 2, 3 reversal. Then what do? Mark the low, mark the high, right? And sell the top. Okay, it's a very easy strategy. Just don't try to predict the reversal, right? Wait for the pullback. Wait for those bears to get short. You know where their stops are. You know where their pain is. And you can simply wait for that nice juicy candle and hit them, right? Buy right into those stop losses. And again, if we get lucky, we'll get that pullback right away, right? And we can run this thing higher. Failure into pullback combination. Okay, that was my second favorite setup as we go higher, as we pull back. My third setup, let's get rid of this channel here for a moment. Let's say, for example, we pull back and we blast going higher here. Okay, my third favorite, you know this one, mark up that high, mark up that low. Remember rotation. Rotation's trying to finish off that move up to that 1798 area. I want to buy that first test, right? And no, I'm not buying it blindly, right? I'm waiting to get down to that channel low, which will usually put me underneath the moving average, right? Think failure, think pullback, think strength move, right? Think failure, pullback, strength move as we come off of that low. You'll see real examples of these setups in our free trading course, right? Linked up there again in the upper right-hand corner. If you're serious about your trading, definitely grab a copy of that free course. Now, another really fun one, because we could easily have a short squeeze, right? All the sellers with their stops above these highs, all the sellers who sold their gold up at this big meteoric up and back down, they may get spooked. And so we might see a very strong run higher here. If we see a very strong run higher, right, we see big, strong green candles, you know the drill, right? I'm not going to try to just jump in. I like to wait for that shallow pullback, that higher high, and that trap low. If we get these, if the market really jumps, and again, I'll be doing this in a faster time frame, right? This is a 1500 tick chart. The day trading time frame is more like a 377 tick, right? A 512 tick. Those are the ones that will be working best to find these entry patterns, right? And again, I go over all these smaller details in the video course I keep mentioning. But that is the setup, right? As we're trying to go higher here. Again, added bonus for combining these setups off the low of a channel. Mwah, beautiful opportunities here as we run higher. All we got to do is wait for them right now. So a two try trap, a two try breakout setup as we try to finish off that rotation. Or do we get, as I mentioned earlier, do we get that, right, trap off the low, failure into pullback off the low here? You know, and honestly too, we may also see this thing start going sideways here. You know, this will be fourth favorite entry pattern on the gold here, right? Fourth one would be if we do start cruising sideways here, what do? You mark up these lows. I would not look for the trap, okay, if we go sideways here. If we go sideways in a range, it's a bull market into a range. What do? We find levels of support below the range, and we combine those levels with what? With a failure. No, we do not try to pick a bottom. Picking bottoms are rookies' games. You are not a rookie if you're watching this video 35, 45 minutes into this video right now. People, you know more than most traders ever survive long enough to know at this point right now. So the most important thing is combine that failure pattern, right, with those support levels down below that low. Right? That's the key here. My fourth favorite setup here for tomorrow. Now, very difficult to sell as the market runs higher. It's going to be very difficult to sell this as it goes higher. You can look for those nested reversals, right? Like I mentioned earlier, just be careful because there's going to be a short squeeze going on. There'll be a lot of momentum going higher here. The only real way I feel comfortable selling this market right now is that strong move down, that pull back to the moving average, that jump off the EMA. That turns momentum, and I can go in and short off the high of that, right, of that channel. That's the one I would feel most confident in trading here tomorrow. Of course, to retest that low is the big objective. Now, I'm sure there's something I might have missed here tonight on this video. I try to cover as many of my favorite setups on my favorite markets every evening on this nightly newsletter. But again, don't forget, tomorrow morning, 8 o'clock Eastern time, we're going to get together. We'll update the charts from overnight, and we'll have a great day tomorrow morning in our trade room. I'll put all of the membership links you guys need to get registered as a new member. I'll put all that below this video, either on the blog at Sideways Markets, or I'll put it right in the description of this YouTube video. The easiest way to get registered is to pick up the phone and give me a call. I can walk you right on through the entire process. I have live chat on the left, live chat on the right, and you can always drop questions in the comment section here on this YouTube channel. Guys and gals, hope you guys have learned a lot. Hope you enjoyed the video. Thank you so much for sticking around with me this late in the lesson. I apologize this video was a bit longer than I would like it to be, but as you can see, I try to cover as much as I can every evening. But let's get out of here for now. Enjoy the rest of your evening. Hopefully the weather is nice wherever you're tuning in from right now. Beautiful springtime day here in Los Angeles. I'll see you guys tomorrow morning, 8 o'clock Eastern time. If not, we'll see you guys tomorrow night. We'll have another great video newsletter coming your way tomorrow night, same time, same place. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye for now.